Welcome back everyone. Now for those that have subscribed to the channel for a while, you would have remembered that I primarily focused on dividend-based investing. And then for those newer to the channel, some of the most recent content is based around growth-based companies. And so in this video today, I wanted to talk about the differences that I've personally experienced when it comes to investing in either dividend or growth-based companies. Now this isn't a comparison on which investment strategy is better. As you'll see throughout the video, I have a section of my money invested into growth-based companies and a section in dividend-based companies. Now, it's true that there's more money allocated to the dividend side, but that's just because I've been focusing on the dividend side for a longer period of time when it comes to the Trading 212 platform. And so let's start with the growth portion first. And we can see that the investment journey hasn't been that smooth. Now, during the early days, we can see from late 2019 to early 2020, I was using the invest account to invest in dividend-based companies. That's now changed, and we can see that there's somewhat of a mixture of dividend companies still. We've got AT&T and a few other ones. We've got HSBC as well. Simply put, those companies have been left in because the gains haven't been great. Maybe in the future there'll be a turnaround, but I've just left them there. But we can see some of the more recent purchases. We've got some shares invested in Mac, we've got Neo, and then Open Door Technologies. So there's a range of growth companies within this mixture. As for how the portfolio has been performing, we can see there's been a lot of negative red figures here. And then if I scroll all the way to the current price, we're currently down just under 10%. And so my experience with growth-based companies, it's not always easy to pick the correct companies. More often than not, it takes a while to make a profit. But the positive here is that, let's just look at AMD for instance. We're up 65% since I first received this stock. There's other examples here where we can be 50% or plus. And even with companies that I personally don't really care about, Bed Bath & Beyond, just one share here, but up 122%. And that's not uncommon for growth-based stocks. That is what draws a lot of people to invest into this style of investment. But then at the other extreme, we have figures in the red. So WeedMD, I have a dedicated video on this company. I'm very bullish, but currently down just under 22%. And so some would consider that this purchase wasn't the greatest. And we have an example of if we invest into one company that returns a loss, in the short run, it can really impact what your total return is during that period of time. Now with my growth investment strategy, I buy and hold long term. It really doesn't make sense to use the Trading 212 platform if you want to buy and sell quickly because you have to deal with FX conversion fees. So a lot of the times when you want to make a profit, you really need to be in the green, let's say plus 10%, just to offset the FX impact. So taking a look at AMD for instance, we have an FX impact of minus £2.38, but then the gain has helped push this figure into the green. Now let's take a look at another company. Just as an example, I'm going to use a dividend-based company, and if I hit the icon, we can see that not only do we have a loss of 4.76%, but the FX impact is 5.28%. So that's what equates to this 10% loss. But more often than not, the FX impact can be a deciding factor on whether you're profitable or not. Now again, there's different investment strategies. People that invest in growth-based companies may buy and sell quickly, but they're more likely to use a different platform such as Etoro. And that's because you can hold all your currency in dollars. You don't have to deal with conversions when you buy and subsequently sell. And so when it comes to growth-based companies, for sure, I'm close to negative 10% currently, but I have no concerns because the investment choices I make, I'm confident that they're going to return a positive in the future. As a result, there's a waiting game before I see some of those green figures. For instance, I'm waiting for WeedMD to make a turnaround, and I will be selling out of some of those positions once that event happens. There's other companies here that I could easily sell out as well, but even though they're high percentage returns, I have such a small amount of number that it doesn't really make a difference anyway. So when it comes to growth-based investing, I've outlined my current strategy, and my experience today is that yes, I'm in the red, but equally it's fun to put a larger amount of money into a given company with a little bit more of hope that the company can make a larger return on your initial investment. So I'm going to switch over to my dividend portfolio now, and we can see that I first invested into the dividend portion, which is in my ISA account back in early 2020. So we're just over a year and we can see an increase in returns of around 22%. And so for my experience, more money has been made in the dividend portion, but for those that focus on growth-based investment, and especially those that have been investing in, say, the last 3 years, they would have seen much higher returns. And of course, it's dependent on which type of growth-based companies you invest in. But generally speaking, growth-based companies have a higher potential in increasing the returns. But with a dividend-based portfolio, in my experience here, we can see how well it's doing currently. And keep in mind that this is really low risk, given that I'm investing in, how many companies is it? I've got 48 investments, so that's a large number of companies to keep track of. But there's very few that are in the red, and if they are, it's generally a small amount. And then of course you have the added benefit of the dividends that you receive every month. And so for me, on average every month I receive around £60 in terms of dividends. So we can see the running list on the screen. It's an endless amount of money that I receive every month. We can see the total dividend breakdown here of just shy of £600. So it's really not bad, given that I now know that every month here on, provided I maintain the amount of money that I have and provided that these companies pay out the same amount of dividends, I'm always going to receive a constant £60 every single month. And in fact, some of these companies, especially the UK ones, have been increasing their dividends. And equally, I've been investing a little bit each time into more dividend-based companies, which just increases the passive income process. Now, before we summarize the two different types of investment strategies, for anyone that is new to the channel, definitely hit that subscribe button. The content that I provide on this channel ranges from focusing on individual dividend-based companies, analysing whether they're a sensible choice or not, and equally individual growth-based companies, whether they're worth the valuation in terms of their market capitalization, and fundamentally whether they should be an investment choice or not. But let's just move on to a summary between the two different investment styles. So the way I see it with the dividend-based side, for me personally, there's a lot more money that I can put into this account and grow it even further. Already we can see the type of numbers that we're going to have to invest into. So I've put in just under £22,000, and then we have the appreciation in terms of the individual companies, and equally those figures could go down, but that's helped increase the return value that you can see on the screen here. But then let's say I want to have a constant £100 every single month, then I'm going to have to invest just under the £40,000 mark, assuming I invest into all the same companies that I have currently. For sure, I could look into other companies that maybe pay out a 5% dividend payout ratio, and then maybe I could put in an extra 15k to reach that £100 every month. And so for me personally, I still have those goals in mind. That is why I add more to this portfolio, and it's mainly because of the dividends that I receive every month. I want to see that grow. And then for the growth-based side of things, the real excitement comes when we invest into companies that have the potential of doubling, tripling, or 10xing your initial investment. And of course, in hindsight, if I invested, let's just say Bed Bath & Beyond, if I put all my money into this one company a year or so ago, I would have increased my initial amount by 122%. Now, that's definitely an investment strategy out there if you are really bullish on a given company and you want to go all in. That is sometimes how people make an insane amount of money. But my goal has always been to de-risk that process. Equally, if I put all my money into, let's say, WeedMD, unfortunately it's doing bad at the moment, slightly under 22%. If I put all my money into that, then I would have lost 22%. But as I say, some of these companies that are in the red, and it's the same with dividend companies as well, it's a great opportunity to invest more, assuming you believe in the company and you believe they're going to turn the stock price around. There really isn't any justification for why WeedMD is in the red to this extent, but that's the excitement we have and the ability for these companies to increase to double or triple or even higher. But equally with growth-based companies, when it doesn't quite work the way you expect it to, you may be holding on to some of these companies for a longer period as you're waiting for these prices to go from red to green. And so that is one of the downsides of growth-based companies. But I think a lot of people really like the excitement of finding those individual companies that are increasing in value. And so they are willing to invest again into the companies that magnified that initial investment. Now in the comments below whether you focus on growth, dividend, or any other type of investment process. Let me know in the comments below on how your portfolios have been performing. Feel free to list out any of the top performers that you currently have in your portfolio. Mine, for instance, unfortunately is Bed Bath & Beyond. Who would have thought it? This was a free stock that I received. Having a quick look here. there isn't really anything too exciting about this company, but I think because it was such a low figure, a lot of people just jumped in and bought this company, and that's what increased the stock price as a result. But let me know in the comments below which companies have been performing well for you. Equally, if you want to call out which companies have been performing not so great, then list that out in the comment section below as well. And so new videos are out each week. I wanted to dedicate today just to focus on the direction that I've been going. Previously it was solely dividend, and now it's a combination of dividend and growth. As a result, that has changed the content somewhat, but hopefully you're enjoying some of the newer material when it comes to analyzing growth-based companies. So if you're interested in this type of material, then definitely subscribe. And equally, if you want to share out this content to other people, it would be great to grow the community and have more conversations within the comment section below of each video. For those that haven't subscribed, now is a great time to do so. New videos are posted every week. And with that said, I'll catch you in the next one.